reaching to new credit customers in the MSME space. As we all know, MSME uh, sector is the heart of Indian entrepreneurship, and it contributes 30% to Indian GDP. But at the same time, we see that there is a huge gap in demand and supply of finance to the MSME sector. So to discuss this and more, I would like to invite the esteemed panel for the session, moderated by Mr. Abhishek Gupta, Managing Director and CEO, Caspian Debt. Could you please come on the stage, Abhishek? And also, I would like to invite the speakers, Miss Shruti Joshi, Head of Insights, Equifax, Mr. Deepak Kothari, co-founder and COO, FTCAS, Mr. Pravas Das, founder and CEO, Orthan Finance, Mr. Utpal Isha, co-founder, Sarvagam Finance Private Limited, and Ms. Basumati Devi, Managing Director, IKF Finance. A big round of applause again. Thank you. So I hope we'll have a great discussion today. Now over to you, Abhishek. Thank you.
Thank you so much. Good morning, everybody, and I hope you had a great tea break and are completely refreshed. I'm really honored and excited to moderate this session today with so many practitioners and support from an independent data source, as I call it. Like it was mentioned, every now and then there's a new report that comes out saying that MSME is the backbone of the country, the economy, and so on. And in different reports, some reports say 94% of the MSMEs don't have access to formal finance. Some reports say only about 20% of the financing being done to MSMEs is for new to credit MSMEs. There are several reports that talk about, I think the general statement or the general narrative, pop narrative in India is that MSMEs don't get access to finance, meaning that there is a large population of MSMEs that have not taken credit or are new to credit. Now for financial institutions, hence, especially in this kind of a conference where we are talking about inclusive finance, new to credit is one metric that is used to see whether the financial institution is able to reach out to an excluded segment of the population. So NTC, or new to credit, is a very important metric that all of us have looked at for years now to try and figure out whether an NBFC is actually serving the excluded. But, like I said, a recent report, for example, said that the NTC customers originated by NBFCs over a period of a year is probably somewhere around 30–35%. That sounds like a low number if 94% of the MSMEs don't have access to formal finance. And NBFCs are the ones that are expected to actually create access to formal finance first before the banks come in. But it seems that the banks' numbers are better at 64%. Now the question is that true? Is NTC being measured correctly? Does NTC continue to be the correct measure? Is MSME, the way we talk about it, is the narrative accurately done? What are all these different NBFCs doing in their own ways to reach out to the NTC or to kind of justify their inclusive finance mandate? So we'll hear about all of that today from our NBFC panelists out here. And from Equifax, we will get the perspective of independent data sources that they bring about, and that using which we can draw some intelligence on access to credit for MSMEs. So we'll talk about that, but I'll request Ms. Vasumati to first introduce herself and her organization, talk about the kind of credit products you offer to what kind of customer segment, which geographies, the type of products that you do. Because all of you, from the NBFC side, each of you actually are focused on a very different kind of customer segment, and all of them are MSMEs. So it'll be very nice for us to know, and the audience to know, what is your specific focus area. So please.
Hi, good morning, everyone. I'm Vasmati. I'm the MD of IKF Finance Limited. We are a 30-year-old NBFC based out of Vijayawada, which is a small town in Andhra Pradesh, out of the South India. So we started out basically financing commercial vehicles. That's how we started out 30 years ago, and later on branched out into multiple businesses of small and medium enterprises, and we also do some amount of business loan. This is basically the segment we are in. So we are spread mostly in the semi-urban, rural, and to some extent in the urban areas. We are currently present in 9 states with 145 branches. So this is the area we service. Our target customers are small and medium entrepreneurs and also individual entrepreneurs that operate businesses or run their own vehicles. So these are the segment of customers we focus on. We have been in inclusive financial for the last 30 years, and we have very great experience from funding these people. We feel these people, service their debt much better than the corporate world because they are immune to the shocks of the economy to a certain extent because this is a means of livelihood for them, and they run their vehicle and pay, or they run their own individual business and pay. They're totally involved in the business and in the day-to-day activities. So we have a flexible loans. We start with a tenure of 1 year and go all the way up to 6 years based on the necessity of the customer and the amount of loan and the way he wants to pay it, what is his income and all that stuff. So, we have been lucky enough to have stakeholders from different areas. We have impact investors, private equity investors, on all the financial institutions funding to us like SIDBI, Mudra, NAB Kisan, NAB Samruddhi, all these people. These have, in a way, these institutions have helped us fund us to the inclusion space, also keeping in line the financial viability of the customer. For us, when we fund a customer, we see if the business is viable, will he be able to pay the EMI and also earn his livelihood and save some money. These are the essential things we look at in funding our customer. So this is the business we operate out of. We also have a subsidiary called IKF Home Finance, which finances affordable housing to our customers. Although we started out as a vehicle financier, based on our customer needs, we branched out into other products like home finance. We are the financier for the first home loan of all our customer base. We don't underwrite just the customer, we underwrite the family. We look at the income of the whole family and fund the customers. We are proud to say 30% of our home loan customers, the primary borrower is woman, where the woman is the primary earning member of the family.
Understood.
So this was an interesting statistics for us, coming from a commercial vehicle, which is a totally male-driven environment, to being able to service.
And for the commercial vehicle finance business, what is the maximum loan amount that you typically do?
See, nowadays, commercial vehicles have gone up to 45-50 lakhs, so we can go up to 45-50 lakhs
Understood.
too. So it's based on the vehicle that we fund. See, we are proud to say we have started 30 years ago. We have built this franchise where customers who started out taking one vehicle with us are now owners of fleet vehicles of 500 to 700 vehicles.
Understood.
That we see is the ultimate inclusion that we have.
Very, very interesting. So, and I think it's a good story of you starting off with one product or asset class and then trying to meet the other requirements of possibly the same customer segment through the housing finance business.
I want to add one more point. As the customers grow, working capital requirements for running their business, even for a commercial vehicle operator or a small business operator, is very necessary. So on top of housing finance, we also offer small and medium enterprises loans for working capital requirements. We assess the business, assess their cash flows, and offer loans to them.
Understood. Understood. Very interesting. And I'll come back with a question on that a little later, but thank you for that introduction. Utpal, why don't you talk about Sarvagram and, of course, yourself?
Thank you, Abhishek. Morning, everybody. I represent Sarvagram. We are a rural middle-class household-focused organization, trying to work on the productivity requirements of the household as a whole. And that includes credit, but it also includes other interventions in mechanization, in technical upgradation of their production, etc. All of them put together. So we try to put a package around the entire rural middle class households to improve their quality of livelihood and affluence, of course. We are a 4-year young startup, actually, operational right now in 5 states. We operate a high-touch, high-tech architecture, which means that we have our infrastructure and branches at the front end, and our customer acquisition and relationships are built by our team members. And we operate a very high-tech back end to be able to service these households as per our rule engines. We operate, as I said, in Rajasthan, Gujarat, Maharashtra, Karnataka, and now Telangana. About 60 districts, 65 districts across these states. In terms of our focus, we are absolutely focused on rural, and rural for us excludes anything which has any splattering of urban or any of those sorts. So at a pin code level, we have those exclusions done. We only operate beyond all of these towns, so to say. We are focused on the middle class of the pyramid in rural markets. We strongly believe that the rural middle class households now are at a similar position of income, of education, and much higher in terms of awareness as to where the urban middle class was about 20 years ago. And we see those numbers, kind of getting followed on. So we believe it is a time to, get in with relevant inputs to this segment. We focus on household as a whole because it's impossible, in our opinion, to segregate, cultivation or agriculture and animal husbandry or enterprise or even salary from the, the balance sheet of these households. And I'm not just talking about very large integrated, joint families. I'm talking about something which is as nuclear as, maybe parents and a son, daughter kind of a household, and you see some bit of crop cultivation, some bit of animal husbandry, and one of the younger ones probably going out and working. So we tried to build a hypothesis around the combined balance sheet of the household, with all its various sources of income, all its liabilities, all its expenditures, so on and so forth, all their assets, all in. And that's how we try to build a cash flow for the household, and then accordingly intervene with relevant products.
And this leads to what kind of products? Would you typically give term loans? What kind of ticket sizes would you do? And security, what do you take?
We do term loans. Okay. On the lending side. Lending is one of our verticals. We can't do cash credit. We are an NBFC. So in MSME, maybe that is an important point to discuss, actually. We only do equated monthly installments. So, while the formal financial sector has traditionally done crop-based or repayment cycle being 6 months, 9 months, etc., we only do equated installments. All our loans are equated installments. Average ticket size is about 3.5 lakhs on the portfolio. Understood. And we back some of those where we find the cash flow documentation to be not very pakka. We try to back that up with collateral. However, we understand that it is the cash flow which is the be-all and end-all of this segment.
Understood. That's very interesting. A household as a unit is what we are looking at, and you're saying rural but middle class. That's interesting. Prabhash, why don't you talk about Arthan?
Hi, good morning. I represent Arthan. It's a fintech NBFC and primarily focus on MSME lending. When I say MSMEs, we actually look at the micro segment or nano segment of MSMEs spread across tier 3, tier 4 type of cities. We do not go to very rural. At the same time, we do not operate at the major towns. So giving examples like kirana stores, pharmacies, small dhaba and hotels. So these are our customers where you see a lot of footfalls happening. There are daily cash flow, cash in and cash out, and these are consumption-led business. So we offer loans to these segment of customers and primarily secured loans. So currently present in 3 states, Orissa, Maharashtra, and AP. with nearly 30 branches, and I mean, average ticket size of around 5 lakhs rupees, and all those are secured loans. So apart from these, secured loans, we also give supply chain finance or
Sorry,
invest.
Prabhat, when you say secured, you mean mortgage collateral or?
So it is either mortgage by the land and building, or otherwise we also take the LIC bonds. So liquid security as well as mortgage. So that's on the secured side. Apart from the secured loans, we also do a lot of unsecured loans. I mean, we do supply chain finance where we onboard small anchors where the turnover is around 10 crores to 100 crores, and then we fund their downstreams, the dealers and distributors, and that starts with 2,000 rupees going up to 2-3 lakhs rupees, but averaging at around a lakh rupees. So the third channel, what you do is a quick loan applications. I mean, you can download the app and you can apply for a loan where you get the business loans in 3 minutes time. So these are the three large products what you do today. And while the primary focus remains on building the secured loan book, but unsecured and the quick loan app helps us to acquire customers fast and quickly.
Very interesting, very interesting. And I mean, you said 2,000 rupees and above. Loan
Yeah,
ticket.
so we give
That's-
2,000 rupees, which is the minimum ticket size, and go up to 20 lakhs rupees, that's the maximum.
That's quite ambitious, but great. But you said that you've built a process that enables you to do that for
Yes.
to be able to do that. Great. Deepak, why don't you talk about FT Cash?
Morning, everyone. So I'm part of a fintech startup called FT Cash, based out of Mumbai. We primarily provide unsecured working capital loans. The two types of products that we have are working capital, which is a term loan, and a supply chain finance product. The term loan is for a minimum duration of 12 months to about 36 months. One of the things that we do differently on the term loan is instead of having an equated monthly installment, we in fact do an equated daily installment when it comes to retailers, primarily because we believe that it allows for matching of cash flows. Instead of doing daily collections in cash, which is obviously more tedious, we have kind of dovetailed it into our payment ecosystem. So effectively for a Kirana store, when he takes a loan from us, we would also give him like a QR code, a POS machine, and whenever a customer walks into his outlet and buys his groceries, when he scans the QR code or when he pays him using a credit card or a debit card, because we are processing that payment, we will take a small sliver out of that towards the repayment of his loan. This primarily helps us in two ways. One is it allows the customer to make the repayment effortlessly, seamlessly. It's especially beneficial for NTC customers because for them, taking a loan is a change in a way that they've never really taken a product before. This seamless method also ensures the other thing, which is it allows us on a weekly basis to forecast the risk for the portfolio at a granular level. So our algorithm basically gets multiple data points across each of these loans, given the fact that the absence of a payment, the presence of multiple payments, the timing of the payments, the average transaction size, all are data points that are getting fed into a machine learning model. In addition to that, I mean, we're present across 5 states, about
What kind
18
of
cities.
Is this urban mostly or rural, urban?
So we're largely in urban places. We believe that even in urban areas, but we're more in the peri-urban areas. We believe there is an underserved market in the urban areas themselves, primarily because these borrowers are largely immigrants that have come to the city. We are largely looking at unsecured business loans because a lot of these immigrants, when they come to cities like a Bombay, Delhi, will not necessarily be able to have collateral in those cities. And hence, it's important for them to have access to institutional finance.
Interesting. I'll come back to this point about the immigrant, businessman or businesswoman at a later point. But that's an interesting segment because I think you're right. It's very difficult for them to get access to loans anywhere. Okay. Interesting. And what is your maximum ticket size? Sorry.
Sure. Our average ticket size is 5 lakh. The minimum ticket size that we do is 1 lakh. We do not do a ticket size below 1 lakh. We kind of did do some experimentation, and we realized that for the segments that we're lending to, it was not, the risk was way too high with the models that we were working. The maximum ticket size that we do is about 10. The sweet spot for us is about 5 lakh.
Understood. Okay, very interesting. Shruti, what I'll do is I'll combine a couple of questions to you in one go. And from Equifax's perspective, can you tell us about the kind of data that you have on MSMEs per se? And if you could, while you do that, and are there some data sources that NBFCs that are running a business of lending to, say, MSMEs, can they draw some insights? Are there things of that sort? And can you specifically talk about NTC per se? What is your sense of all the numbers that I just threw? And do you think that the definition of new to credit as the metric of inclusiveness is appropriate, or do you, have anything to say about that?
Sure. Thanks, Abhishek, and good morning to everyone. So from Equifax's perspective, that was your first question, what kind of data we have. Equifax has vast data, and this is further divided into 3 main bureaus, which is the commercial bureau, which mainly is the MSME segment, which is the small, micro, medium enterprises. We have the retail bureau, which includes business loans as well, and there are almost 8 categories of business loans. So this could be given to partnerships or proprietors, and the ticket size is usually in the range of, it could start as low as 10,000, it could go as high as 5 lakhs. That's what we have seen on retail. And there is a microfinance bureau, which has very, very rich data of JLG and SHG. Apart from that, we also have another engine, which is a workforce bureau. But, going to the fact that, these 3 bureaus are, today they are mutually exclusive from each other. So what happens is when a lender usually, say, Shruti wants a business loan, on the retail side, the lender will just ping the retail bureau. Having said that, there could be a very rich presence of Shruti either on the microfinance side or the MSME side. We are seeing that the overlaps here are as high as 35% between microfinance to retail, and between commercial to retail, they are as high as 25%. So the point I'm trying to make is we cannot look at lending in silos. We have to have an inclusive lending where we have to look at all these 3 bureaus.
Interesting. So you're saying that there is, for example, for somebody like me, I'll have an individual credit score, and if I have a firm, there will be a credit score for that firm. And if I happen to start off my business career with a microfinance loan, I will have a microfinance score, but I will not have a retail score. But over a period of time, when I take a retail loan, I'll have a score across retail, and if I continue to have microfinance loan, that score will also be there. But if I run the retail check as a lender, if a lender runs a retail check on me, they will not find any data if I was only doing microfinance in my initial days. That's what you're saying?
Absolutely right. So
okay.
What we have seen is that it's a customer journey where the customer really is graduating. So say a new customer is coming in the market, say it's a young customer, they usually may start off with a credit card in case these are urban customers. For a lot of rural customers, especially if they are into the business loan category, especially women, they start their journey with microfinance, and then they slowly and gradually move on to the retail side of things. Also, one of the other points that was mentioned is looking at a household rather than individuals. I think it's a very, very significant point, because the journey of a lot of families in India is not an individual journey, it's a household journey. For example, when you take a home loan, it's usually a co-borrower home loan you take. Wife and husband's loan gets clubbed as one. So we need to start looking at a broader perspective when we start defining NTC. To your second question, Abhishek, where you were saying, what about NTC? So we know for a fact that when we start looking at loans individually, for example, just on commercial bureau, we could see NTC as high as 60%. However, when you start sifting through the data and start looking at all these 3 numbers combined, like the microfinance, retail, commercial, the NTC numbers come down to 18%. So they are really present.
Okay, wow.
Yeah.
Okay. So I think this point that you're making is Okay, so on one side, we have these big fat reports saying that 94% of the MSMEs don't have access to formal finance. We have another report saying that you know, public sector banks or banks have been able to source customers in such a way that 64% of the MSME customers are new to credit. But NBFCs have done a poor job of 35% or something like that. Now, what Shruti says is that it is probably not looked at all the data points. Okay, so for NBFCs as lenders, it makes life more complicated. So it basically means that when I as an NBFC wants to make a loan, I have to look at the microfinance bureau, the retail bureau, and the commercial bureau, all of them together. But that costs me a lot of money, right? So there has to be some solution. But very interesting. So what you're saying is that NTC percentages is, the real NTC percentages of people who have not taken any loan is probably around 18 to 20%. Now that is probably blasphemous when you compare it with the reports that are generally talked about. Okay, that's interesting. Do you, Deepak, have a different definition of, so because we're talking about inclusive finance and all of you do say that you are an inclusive finance institution. So now that NTC is about 80 to 20%, I don't know what the NTC percentage is in your case, but do you have a different definition of inclusivity beyond NTC? Or do you consider NTC as the metric that you track to say or demonstrate that you're an inclusive financial institution?
So I think to address the question which Shruti brought, right? I mean, if all NBFCs, and us included, right, we're lending to largely proprietorships. I mean, 80% of the loans that we give out, if not more, are to small proprietors. If today I were to pull the commercial bureau and say that, okay, because these are MSME loans, let me check the commercial bureau footprint, I can easily tell you that like maybe 10% will have a commercial bureau footprint. So my NTC number will suddenly become 90%. But that's not factually true because 80% of them, I mean, will, like Shruti said, have some footprint. I mean, that footprint might exist because they've taken a consumer durable loan. The metric that we track very closely is new to business loans because that's the new product that they're taking for the first time around, and that's relevant for us. Have they ever taken a business loan? And that's something that we track very closely. So far as, I mean, the metric to track for inclusive finance goes, what we very strongly believe in is that some of these merchants that we're bringing into the realm of, taking institutional finance for the first time, we're also hand-holding them in their journey where we are creating a digital footprint. So for a lot of them, because of the payment ecosystem that we give them, it allows them to increase their acceptance of digital payments. So over a period of time, we track that metric, which allows us to see how their digital footprint is increased, allowing them to access more institutional finance over a course of time.
Okay, so you're saying that you may have customers who would have taken a personal loan or something like that, but it is not enough credit track record. And by helping that customer take a business loan, which is possibly a higher loan ticket size, and making sure that they repay regularly on time, you're helping them build a better credit history so that they can take a larger loan in some time in future, because the personal loan may probably never go up in ticket size over a period of time. And I'll come back to you, Shruti, later on and ask you a little bit about the BNPL, because in the last 2-3 years, I think everybody is saying that before I made a loan, some BNPL loan has been taken, right? So how does that muddy the waters? I'll come back to you later on. But Prabhash, do you think that NTC, new to credit, is a good definition to define your business as an inclusive business, or you use a different metric?
See, when we say NTC is one such parameters which we, discuss or we think about when giving a loan. But inclusivity is something much larger than only the NTC. What we believe in inclusivity is to giving a loan who has not taken any loan earlier, or he's, somehow excluded from the market because of many reasons. Whether that particular business is, not a segment which others are focusing on, or he doesn't have a lot of, documented proof of income which lenders usually consider to give him a loan. So we help him to, create his P&L then and there with the customers, and we have put lot of algorithms, lot of alternate data to help that particular customers to come on board, and taking a loan from us. But if you look at the pure NTC as per the bureau and all, So we still have around 25% of our customers who are NTC who have never taken a
First
loan.
time borrowers.
Yeah.
And this is at the individual level, not at the household level per se.
No, we do not consider any household level. It's an individual level because we only give business loans to the individuals, and these are proprietors only.
Okay, okay, understood. So you're saying 25% NTC, interesting. What about you, Utpal?
What did we agree on the definition of NTC again?
So we are saying that no loan,
No loan?
no loan at all,
Okay. No jewel loan?
nothing,
Okay. No SHG loan?
nothing.
No SHG loan by the wife of the proprietor?
Yeah, so that yes, that is yes.
Okay. If you're dealing with three fuzzy topics at the same time, Abhishek, I don't envy your job. One, inclusivity. Second, NTC. And third, MSME.
Yeah.
Right? So,
Why do you say that, if you can?
okay, why MSME? And because you have bracketed one individual street hawker who sells idlis on Hyderabad street or Bombay streets, and somebody who has I think the current definition is plant and machinery investment worth
Revenues, I think medium is 250 crores.
250 crores, okay? So that is your range of what you said as MSME, okay? So I don't know how you will, calculate inclusion in that, but so that is one fuzzy thing. Second itself is, inclusivity. What are you talking about really? And we have for ourselves seen, and if you take, for example, if you're talking numbers, then for our markets, against about 12 crore farming households in this country, more than 10.5, 11 crores unduplicated Kisan credit cards exist, This unduplicated number was put out, I think, a year or two ago by NABARD or RBI, I don't remember which one. Earlier, there were debates on, multiplicity, etc., but then they deduplicated. So would you say that it's 100% financial inclusion of all farmers in the country? Then there is no debate on rural finance at all, right? So therefore, I say inclusivity by itself is fuzzy. And the third one, NTC, Shruti said that the overlap between microfinance and individual was 25%, and that you are still saying the same person. But all SHG, JLG loans primarily have women as their borrowers, and while all MSME proprietors, so to say, by and large, we pull bureaus of the men of the household. So forget household as a concept, etc. I'm just saying that not all microfinance loans have gone to buy goats and buffaloes, right? A lot of them has flown, not maybe some into consumption, but a lot into the main occupation of the household. It could be cultivation, it could be small enterprise, so on and so forth. So therefore, all three are fuzzy topics. And therefore, the reports, kind of can vary from any number to any number, and nobody could make sense.
You're taking an aim at the people who make those reports, but I think it's real. For people who do this work day in and day out, when we try to, when we read those reports, we feel very happy. It makes very good PowerPoint presentations to tell the investors that TAM is this huge, but then the actual TAM, or I don't know what it is called, real total addressable market is different. It may not be excluded. It's, I think all of them are hinting there is a possibility that they have taken a loan. That doesn't mean that we have achieved inclusion, because inclusion has to be complete. They may have got some loan for one particular purpose from somewhere, but that doesn't meet the entire requirement, either because the ticket size is not good enough, or because the structure of the product is not good enough. For whatever reasons, they are excluded. And there's possibly a reason why we need to do something to address all those different types of needs. And we'll talk about that a little later, but before we...
just put some data behind, this whole story that I'm giving you. Because that, for us, and, after we started talking about this panel, I ran a query on a sample of my MSME, a business loan borrowers. So there is a segment, then there's a product as well. So there is a business loan, which may or may not be primarily to an MSME customer. A farming household could also get a business loan, because you see in credit bureau trade lines, as agriculture business loan has become a category, now. So I don't know whether it is agriculture or business of agriculture loan. It's really very tough to figure that out. But for us, NTC is no adult member of the household has ever borrowed any type of loan. I ran a check on 10,000 of our business loan customers, sample, random. 4% of the households are NTC.
Okay, with the definition that you're saying, no.
With my definition, 4% was NTC. There is no bias in my frontline or credit engine, etc., etc. We have a very healthy disregard for credit bureau scores, actually, my apologies. We have a very healthy regard for the trade lines that you put in, very healthy disregard for the scores that you put out, actually. So there is no bias in terms of selection, NTC, non-NTC, etc.
And you're rural, right?
Pure.
Yeah. Okay.
Now, if you include a gold loan or a JLG or a SHG loan from the member of the household, or any Kisan credit card, a Mudra loan, that 4% becomes 44%.
Understood.
Okay? 64% of our households have a peak credit, and that's the number that Bureau reports, so it's easy for us to process that. Peak credit of less than 1 lakh, where my average ticket size is 3.2 lakhs to that household.
Understood.
These are the numbers behind the three fuzziness.
Which kind of reestablishes the fact that they have credit, but it's not enough for whatever they require, probably.
Yeah, absolutely, absolutely.
Understood. Vasumati, do you follow the definition of NTC, or you don't think it is an appropriate definition?
NTC is relevant to a certain extent because it helps us identify customers, underserved customers and businesses, and we are giving them loans and moving them to formal credit. It's only a parameter, but we at IKF believe that to consider inclusive finance, there are 3 different parameters that you look at. Depth of inclusive finance, sustainability of financing, and digital index. So these are the 3 parameters for us at IKF that define inclusiveness. Depth of inclusion finance, a customer could borrow a 20,000 or a 30,000 loan and he can be considered as a non-NTC customer. New to product, but he can be considered. But a large loan for his business is different, which could be a 3 or a 5 lakh loan to a 20,000 rupees loan. So that is a trigger for us to understand, have we funded that customer in that segment? Sustainability of finance, you could get one loan because of whatever reasons. Sustainability of credit over the period of the tenure of the business is very important. Not getting one loan, being able to get credit multiple times as and when required is a key to this. And we also measure digitalization. Are they using digital services and technology to upgrade their business, improve their revenues? These are 3 things we look at to understand NTC. If we really look at it from bureau score, the kind of customer we are servicing, we have to pull all the bureaus. We cannot just go with commercial bureau. So more than 80% of our customers are non-NTC.
Non-NTC. More than 80% is non-NTC.
So they're new to product. They could have some loan, some consumer loan, a microfinance loan, or a small ticket loan. But for me, that is also a new to product loan. It cannot be NTC. But a customer that is servicing a 2,000 EMI to a 15,000 EMI, the dynamics are totally different.
Interesting.
So when it comes to product development, I'll talk in more detail because when we develop a product, we take all these into consideration and develop our own product.
Very interesting. So I'll come back to you with the, I think this point that you made about the product. But Shruti, one thing that I've heard a lot of people, I'll say crib about in the last couple of years is that, this thing about BNPL proliferation and basically people taking or personal loans, taking the loans and defaulting without even knowing that they have defaulted, leading to damage to the credit scores. I've heard some NBFCs also say that, we disregard that small, 10,000 rupees loan or a 5,000 rupees loan completely in our credit assessment because we think that customer doesn't even know or whatever it is. Do you see some numbers or is there something on the credit bureau side on that?
So Abhishek, I'd like to answer, to the point that we were making on the product development and to Utpal's point as well on the credit score. I agree we need to start looking beyond the credit bureau score. So there are a lot of cohorts or lookalikes that we could look at. So for example, a customer being, say, primarily in rural, we do know, for example, how the behavior of the rural market is in that area. We know if certain income patterns are there, how the behavior is there. So the bureau having that much of rich data, the cohort data can help institutions make those kind of models. And I completely agree with Utpal that we have to look beyond the score, especially if you're trying to address the NTC segment. On the BNPL point which you asked, the BNPL data is amazing. We have seen a 40% increase in disbursement on a year-on-year basis in BNPL. Now these BNPL, the way we define it, are primary loans less than 10,000 rupees. So, it's a very, very small subsegment of loans. Fintechs take the lead here. Around 34% of loans sourced by fintechs are NTC loans. Around 24% loans sourced by private sector banks are NTC loans, and the rest of the other segments is less than 20%. So that's how the data is speaking.
So this is what, consumer loans for some purpose, or it is like, buying something to pay later? Do you have different data for, so for example, if I take a 7,000 rupees loan to go to, to buy some travel tickets or something like that, versus I buy that, I buy a phone and take that loan. Do you have different data?
So when we talk of BNPL categorization in the bureau, we are still not started getting the BNPL tagging.
Okay.
So we are purely looking at ticket size. So to answer your question, Abhishek, I don't know you have taken the 7,000 loan to travel or 7,000 loan to buy a mobile phone.
Okay.
My presumption is because it's a 7,000 loan, I am tagging it as a BNPL loan. Because that's the cohort we can use.
So, and you're saying that in that segment, the fintechs have been disbursing, so 35% of the disbursals are to NTC.
NTC, yes.
That probably is, okay, interesting.
So that is an interesting point because fintechs are taking the lead. The other numbers are very close to the NTC numbers we all were speaking about in the previous discussions as well.
Okay, very interesting. So for a consumer loan, it seems that the fintechs have been lending small amounts very quickly, and they have been able to cover a large number of NTC customers. So by the time, if at all, but these are personal loans, these are not business loans. By the time the same customer comes to borrow for a business, they would already have a credit track record and will not be considered as NTC because they have taken this small loan. And which is why all of us here are saying that the NTC percentage is not as high as it is made out to be for MSMEs. For individuals, it's probably still there, but 94% of the MSMEs not having access to, institutional finance, that number needs a kind of a check in all possibility. Vasumati, you were mentioning about, at least your customer segment, there are a bunch of things that you've done in terms of the products and processes that make it easier for you to address the inclusivity question the way you defined in the 3 points. Can you tell us about that?
Okay, so for us, product development is key to the success of any product. So, we are funding...
Hold the mic a little closer.
Okay.
Just hold it closer.
Okay. So for the segment of customers we are funding, there are certain loans that we exclude, which are Kisan credit card loans, gold loans in the agri segment, as we are funding in the semi-urban and rural areas. And also these app loans that people have taken during COVID, which are small amounts like 3,000, 5,000, none of these are in existence anymore. So they don't know where to go and pay. So these are things that we take into consideration while developing a product. We, for our kind of customer, CIBIL score is non-material for us. We look at the kind of loan he has serviced, the amount of EMI he has paid to what he has to pay now. So, ours are not consumption loans, ours are commercial vehicle loans where the customer earns and pays. What we look at mainly is the product we are funding. Is it a product that is going to earn him the income to pay our EMI? That's how we develop our own products and fund them. We don't want the people, even our team at the bottom level, to go analyze, try to understand, will he pay, how will he pay? There are certain products that generate the income. Those are in there. Based on the customer profile, we'll tell them this is how much you can fund. So the system or the tool itself tells them the range you can fund in based on the model that you're funding and all that. So the person at the bottom and even the customer, you don't waste a lot of time trying to understand how to fund them, what to ask for, all these questions. This is on the vehicle side. On the MSME side, we have developed our own templates. let's say you're funding in the agri segment, especially for cows or buffaloes. There is a certain amount of milk the buffalo will produce. There is a certain price. There could be a difference of 50 rupees to 50 paise to 1 rupee based on the market, but there is a certain amount of milk they produce. So no matter what the people at the bottom level, when you talk to the customer, they tell you. The template itself tells you this is the, if he has so many buffaloes and so many cows, this is the income he will earn. So this is the EMI he can pay you.
And just a quick question. Does the template change depending on the geography that you operate in? So for example,
There is a little difference in geography, so because the buffalo milk is more used in the south, cow milk is more used. So these are templates that we have developed over a period of time. So we are only targeting businesses where we have developed templates for.
Okay. So that is interesting. So what you're saying is that you have identified businesses where, so of course one part of the business is lending to commercial vehicles, which you really understand well, and to my mind, that also is an MSME. And so there you are essentially lending, of course, using the asset as a security, but there is some other assessment that you're doing by doing a differentiated assessment of, I mean, you don't just go by the credit score, but you're basically doing a differentiated assessment of what kind of loans that person has taken and the kind of repayment he has done, and based on that, you're taking a decision. So it's a kind of a, not just take the credit score and you know, take a decision. Interesting.
If I could add here, Abhishek, for one of the institutions, we have helped, make a similar score. We call it the MOO score. And, it's pretty much that data. It's, the data of the cattle, which we have taken into consideration, and, how, that data is then helping the revenues of these, individuals. And with that, we have created a score. Bureau data is also used as a proxy because, we know how all the people in that area are doing. And, generally what we have seen is people in a certain area tend to have similar activities.
Yes.
So that has, yielded much success for that particular institution.
In a way, while assessing this, we come up with new products. During COVID, the reverse migration was happening to the villages and all that stuff. So more land was getting under cultivation. So the tractor customers we were funding before needed a JCB backhoe loader to dig and till and all that stuff. So that's a new product we came out during COVID, which is performing extremely well. So it's just the interaction with the customers and the necessity on the ground that dictates the products for you.
And in a way, it seems to me that the type of businesses that you fund, you're trying to make sure that you are limiting yourself to a specific set of, so for example, commercial vehicles, irrespective of the sector that the commercial vehicle serves, is probably going to be a specific bunch of sectors.
No, commercial vehicle will fund for any business.
For anything.
Yeah.
But you make sure that you understand the commercial vehicle part of the thing and how the money, revenue is generated using the commercial vehicle. And
in
then
a commercial vehicle, fuel cost is 40 to 50% of the cost. So these are things we understand based on all our stuff. So
understood. You would probably not want to, for example, go and make a loan to, say, a clothes store owner in Hyderabad. Or would you do that?
we would also do that under the MSME segment, but we have to understand the business. See, clothes store owner, based on his GST, if he is a GST return holder, then he will go to the banks or bigger NBFCs and get the loan.
Yeah.
So for that, we have to understand what the footfall is, what the sale is. So, these guys don't pay GST, so you cannot believe it them. So you have to stay with them for a week and understand different days. And also, how much material is he buying? How much goods is he buying?
Understood.
So these are assessment tools that we have developed.
Understood.
We are not into the plant and machinery segment,
Understood.
but all this trading and all that stuff we are.
That you avoid. Okay. Okay. Thank
So
you.
Important milestone. In fact, in Pradhan Mantri Vishwakarma scheme, the idea of Honorable Prime Minister is to make this scheme as a model to be emulated in any further schemes, launch of any further scheme. So therefore, the emphasis of the government, so far Pradhan Mantri Vishwakarma scheme is concerned, more on the quality. This provides
all individuals
identification, first, a very rigorous identification process is there for 14 trade artisans, and then training them, providing them skills.
irrespective of which profession.
Of course, they are already skilled, but kind of upgrading their skills with the latest tools and technologies, then providing them around 15,000
out at
a toolkit costing around 15,000,
household surplus.
the modern toolkit, and then they become eligible for any bank
for
loan.
then,
So you
productive
look at this
deployment.
scheme. I mean, first you are identifying these skilled persons
Yes.
who doesn't have access to the
More
loan.
often than not,
Then you are
have
upgrading
all,
their skills, and then
adult
you are
members of the household as,
bringing them to the
applicants and
fold
co-applicants
of banking
to the
system.
loan, to the loan product that we're talking about. The challenge before
I
us
would
then
also like to mention
then is
here
its seasonality,
the
because
recent
I spoke about
initiative
only doing
which
equated
is
installments.
currently
In our
being,
opinion, if a
I mean,
household is away
is-
from our view for a 3, 4,
is
5,
under
6 months
implementation.
then
The
I've
Viksit
not
Bharat
known that
Sankalp
household,
Yatra.
you know,
Honorable
and
Pradhan
get into a
Mantri
dark territory. So, to arrive at
has the dream of
installment
making
in
this country as developed country
cash flow
by
is
2047.
essentially what we try to
In order
create as
to,
our own.
in order to
that is
make our citizens
how
aware
we do it is
about
we're
the
heavily dependent
various
on data, and
uh,
data not as in
various
seen, but as in what is available in
good
documents.
initiatives taken by the
Another
government
holy
in
grail
last
that you know,
10 years,
want to crash is
and
that these are
to
data dark households
kind of give
or
a
the
sankalp to
transactions
the
are not in the
citizens.
formal sector.
This
For example,
Pradhan
we just spoke about, we don't
Viksit
count
Bharat
cows and
Sankalp
customers.
Yatra had been
We
launched
want a
very recently.
track record
This
either
Yatra
from the
will,
dairy from which you're pouring milk
this
or from
Yatra
the
will be
bank
there
statement,
till
because a lot
third
of
week
these
of
migrations
January.
happened over the last 4 or 5 years.
If I remember
And we don't
correctly,
want to
till
lose on the
25th
advantage of the
of
entire tech
January.
stack which has been built, the
And
entire stack, as linked to the
this
full
covers
financial
whole of India, and various
Let's come
schemes
from there
including
and
the
then sit on
6
our,
schemes of financial inclusion of DFS. There are of course other schemes of the government which are being showcased in this Viksit Bharat Sankalp Yatra, and Honorable Prime Minister is interacting personally with, of course, online with many of the beneficiaries
integration from there
in
to
this
yours.
scheme.
That is what
So,
you're seeing in your
I think
areas, and are you
the
able
people
to
who
pull
are-
data out from the apps directly, or they're kind of showing you a screenshot?
No, the customer gives the consent and then
with
the
a view
dairy can then
to
send it to us.
give impetus here, we saw
And
one
it's not just
example of
one or two
IDFC.
days. It's now, you know,
They are
quite
using
dramatic.
heavily,
Yes.
they are leveraging technology to enhance the penetration of insurance and credit. I think these days, many of the banks also, almost everyone is using technology to increase the penetration of insurance, credit, and investment solutions for the financial inclusion customers too.
But I think
Linking technology-based data analytics with traditional banking and insurance activities is facilitating risk assessment and credit delivery through digital mode, in which fintechs are playing an important role. Sydney is doing a great job by being an innovative partner in all these kind of initiatives.
How did you
Even the two schemes, Swanidhi and Vishwakarma
First
scheme,
thing what we
Sydney is
primarily
again
do is
playing
we
a
look
very
at the cash
important
flow.
role.
Because that's the
by-
only thing
by
what
designing
matters
the
for a customer to be
interface
onboarded.
of the
And
customer.
doing that,
and,
really,
you know,
85-90% of our
front end
customers do
and
not
back end
have any documented flow. Right, so
use
we
of-
build
with the use of
entire cash
technology.
flow for him by sitting with him.
Adoption of
So
technology,
we
of
have
course,
designed a
results
very scientifically
in
designed a
greater
questionnaire
convenience for the customers and
ask few
cost-effective
questions in a
delivery
much
of
different
financial
way,
products
and you get
for
the
the
answer. He cannot take it.
for the
So
financial
we have
institutions.
gone to a granular level where
Let
you
me
have asked
mention
him,
here that while
he
public
cannot
sector banks have
block
done a wonderful
the
job
numbers
in furthering financial inclusion efforts and have done a lot of outreach for popularization of financial inclusion
are
schemes,
affected by
the
different
participation
seasons,
of
highs and lows.
mainstream private sector banks,
Apart from
maybe
that, we
IDFC is an
also
exception,
capture a lot of other data, like we take a
is,
photograph of the shops and all.
is I think lacking,
We have built
and there is
a,
a lot to catch up
multimodal
by
AI model
the
where
private sector
each
banks
photographs are
with their public sector counterparts in
viewed
this
in a different
aspect.
way, like
Except probably
what is
in one
comfortable in
scheme,
that
that is Mudra,
that
where
it-
private
it
sector
actually
banks have also
estimate the
contributed
depth
a
of the
lot.
soil, it estimates
So
how many
therefore,
skills
the people who
that
are
they
present
have.
here
There it
from
is
these
also-
private sector banks,
I mean,
I would
it's-
request them to increase their
Also use a lot
participation
of
under
scientific
PMJDY
analysis from the Google
and Jan
Map,
Suraksha
from
schemes
India
in
Map,
order to help in realizing
find
the ambitious
their
goals fixed
ratings,
by the government
comments about
for
this
itself.
because today you will find, so you're saying Google.
In the sessions which are planned today in this summit,
Because these
the
days you'll find a lot
emphasis
of
I
sites are
think will
available on the
be
Google
on
Map.
all these aspects
And
such
with
as
the
financial
ratings, a
inclusion,
lot of comments you will also
inclusive
see.
finance,
So we do a lot of
extending
scientific
finance to
analysis on
MSME,
this. And
role of small finance banks,
even positive
climate
also,
adaptation
you'll see
and resilience, inclusive
comments
lending
you'll
for women
primarily find
empowerment,
negative,
etc.
but the ratings you will find
Eminent
the positive.
speakers from different parts of the world will be presenting their views during these 2 days. I hope that the summit will go a long way in promoting inclusive finance in the country. In the end, I would like to wish great success to this Inclusive India Summit and extend my best wishes to all the participants and to the organizers of this event. Thank you. Jai Hind.
Credit history of bureau records and all. Will you put me on board with all those things?
Thank you, sir, for those very inspiring words
Also,
and your
as you said,
insightful
how
address.
do we keep 2,000 rupees loan?
We once again thank all our esteemed speakers who have joined us here for the inaugural, for joining us on this occasion and setting the tone and direction for the 2 days of the summit. May I now request Mr. Vipin Sharma to kindly present a memento to the esteemed chief guest as a token of our appreciation and gratitude.
So those are verified automatically on the floor.
Mr. Vipin Sharma, I request you to felicitate Dr. Vivek Joshi on behalf of all the organizers, sponsors and partners of the summit.
We have a hybrid model of underwriting, which basically...
We also have small mementos for the speakers as a token of our appreciation for their time and input. And I'll request the team to hand them over as they leave the stage.
Apart from banking and bureau...
Once again, a big thanks to all the guests at the inaugural panel for opening the summit here today.
Ratings can be bad or good, but they also
And thank
give
you all,
another
ladies and
insight into the
gentlemen,
vintage.
for joining us for the inaugural.
When the first rating came in, lets you know the vintage of the particular
We are behind
business.
time, but we will take a quick break for tea. This is a quick 10-minute break only.
It allows us some insight into if there is any variation, if there is any correlation between that and the
And
cash
before we
flow.
break, here are some
The
important
statement in
announcements.
itself
Please
is a
pay
plethora of
attention.
information for us,
Please
because
do make
it
sure
allows
that
us
you have
insights
collected
into
your
who are the
M
transaction
badges
partners.
and coupons for
we
copy of
do
the
is,
Inclusive Finance India report can also be redeemed at the access desk right outside the hall. Please don't forget to collect the M badges if you haven't collected them already. And tea is being served in the hard court and the garden area outside. We would also like to share with you all that this year we have introduced a web app. To access the web app, you can scan the QR code. By scanning the QR code, you can view the program, the schedule. You can also network with other delegates and to take part in the polls. And also, we will request you to give your valuable feedback, all at the touch of a button, or shall I say, at the touch of a QR code. So please do scan the QR code, and please do collect your M badges if you haven't done so from the desk outside. Please do register yourselves, collect your badges and kit. You will find your coupons for the tea and lunch also in the kits and the M badges, without which you will not be able to access the tea or the lunch areas. So please don't forget to do so. And quick 10-minute break only, ladies and gentlemen. Let's try and make it back in time. Thank you and see you after the break.
The quantum of the loan is determined on the basis of elements of data which cannot be deceived. The kind of balances that he has, the kind of vintage that he has, which can be established by a document which is like without dispute. In addition to this, what we do is we layer it again with a third-party check, which is done both at the premise of the borrower, where he's running the business, and at his residence.
Understood. Very interesting. So, I mean, I think what is interesting to see is, to the point that Utpal brought up a little earlier, is that MSME is a fuzzy topic. You have everything from, the local grocery store to a company with 250 crores revenue as MSME. But even if you look at the micro segment, which is, I think, 96% of the MSMEs as per data. Again, I don't know whether that data is correct. But basically, it says that significant majority is micro. Within that also, from what I see across all of you, is that each of you have chosen a particular area of expertise of customer segment, designed your products according to that, and then started to lend. Because I think another data point that came up a little while ago, it said that even though access to credit may be there, all the requirements may not have been met. So it's possibly different NBFCs with a different product expertise or customer segment expertise that can come up and meet that. Is how it is. It seems to me. Shruti, another. I don't know if the data shows this, but another aspect of inclusion, for example, is geography. And for example, they say that the poorer states probably are worse off when it comes to access to finance. Have you seen such kind of aspects in the credit bureau data?
So we have seen aspects of geography in the credit bureau data. We had, some of the key lenders talking about the fact that they are into the rural and semi-urban market. Rural, in fact, has seen the maximum growth of almost 29%, followed by semi-urban at around 24%. Urban has seen a growth of around 17%. Now, this is also because of the fact that urban is highly penetrated, which Deepak was mentioning a while back, since he's doing, lending in urban. So that is one key aspect that we are seeing. So while, there is good growth in rural, the numbers themselves, the denominator is also low. And because of a lower denominator, you see a faster growth.
Understood.
In terms of states, we are seeing excellent growth for lower ticket size, for example, in the states of Karnataka, Maharashtra, Gujarat. As we move to higher ticket size, this changes a little bit. We see Maharashtra, UP, Telangana on the top.
So, and these higher ticket size that you're talking about, are you talking specifically about MSME loans or in loans in general?
So the higher ticket size are the MSME loans. Okay. The lower ticket size, which is less than 10 lakhs, are retail plus micro loans. Okay. So less than 10 lakhs, whether they are on the commercial bureau or on the retail bureau.
And they could be used for business or consumption purposes,
yes.
Either way.
But there are states, to your point of, can we do better? Yes, we can. There are states of, for example, the Telangana state, a state of Delhi, Haryana, where we aren't seeing the kind of NTC penetration for one, the kind of, growth versus the demand. So, there are places where, we are seeing a little bit of a lag. Having said that, there is an improvement overall with rural, coming up at least faster.
Interesting. Yeah. No, I think Telangana will get corrected in a year's time. I think the High Court came out with the order sometime last year, and since then, I've seen several people come into Telangana. So I think that thing will change. Okay, so you're saying that there is a little bit state level, difference in the space of growth. So
can I make a related point here? So we only see data at probably state level, while all bureaus report data at a pin code level. So let me not talk about Bihar or let's talk about Maharashtra. Okay. You would say that it's amongst the higher credit penetrated states. Let's talk about Nashik as a district. Amongst Maharashtra districts, this would be, higher one because it is not in Vidarbha or it is in the, what is called the Desh region. Now, if you look at and these are our numbers, forget Nashik because it's an urban area, we don't operate anywhere around there. You go to a tehsil of Nashik which is called Sinnar. It is about 40 kilometers from Nashik. And then we operate from Sinnar in a 25-kilometer radius, covers about 7 to 8 pin codes. Now, Shruti, if you go back and look at your data and just take the census households as the base, Sinnar has every single, big NBFC and, major private and public sector banks present. All. In fact, there's a small building in Sinnar, it's called Banking Plaza. Okay? Now, from Sinnar, 2 kilometers down the line is another pin code which starts, 2 kilometers. And look at the credit per household in those pin codes versus Sinnar. And our intelligence says that number is 20%. So within these states, there are huge concentrations that are building in. And one measure of inclusion could be on whether all formal sector players have been lazy enough to operate in the pin code where their branches are present.
Understood. So, okay, so you're suggesting that we should look at the data and compare where the location of the branches are and where the loans are being made, and if there is a reasonable per capita density of loans being made in the other pin codes outside of the branch pin codes.
Yes, and Bureau is a very good source because you report the KYC pin code of the borrower.
Yeah.
So you can know exactly, how this matches.
So Utpal, you're absolutely right. Bureau has data to a pin code level. And it's like an onion. If we start peeling the onion from state to district to pin code, the data is very, very diverse. Traditionally, we have seen that pin codes which are doing well continue to do well, and lenders want to lend there. And I'm not sure if the borrowers only want loan from those pin codes, but that is what the data does show. There are certain pin codes which are coming up, having said that. So when you start doing a micro-analysis, then that's absolutely something we should look at. We also have the number of institutions present in every pin code, and that is also something that we do display. And that should be a parameter for inclusion. I absolutely agree with you.
Okay, thank you. So I think we are up for the official time, but since we started 15 minutes late, I will request a little bit more patience. We'll take 10 more minutes and I'll do one last round of questions where I'll ask each of you, you are doing your bit as respective NBFCs or data providers to improve inclusion, but if you were to have one request or suggestion to say anybody else, any other stakeholder, say it's regulation, capital providers, data providers, anybody, if you were to make one complaint or make one suggestion, what would that be from your side to improve, make it easier for you to deal with the inclusion aspect better? Who would you request, or what would your request be? Basmati, can you? Or you can crib also, I think. That's perfectly okay.
So I know. So it's
Only one crib?
Yeah, I know.
Let's start with one and we'll see.
See, the regulatory framework, with so many circulars coming out on the regulation, there is so much confusion among us itself. At least we are to some extent understand this regulation and can read the notices and all that stuff. But there is so much confusion. They want to service.
Please give an example. Please give an example.
See, the recent risk regulation.
Risk weight.
Yeah. See, what is it trying to penalize? They want the inclusion space to be serviced. The circular was completely against inclusion. See, if you are increasing the risk weightage of NBFCs serving to this lower bottom segment, the banks will increase the rates, which in turn will have to pass on to the customer. So who is benefiting out of this?
Yeah. Very interesting. So you're saying that NBFCs are supposed to enable financial inclusion, but you've increased the risk weights for bank loans to NBFCs. So bank loan rates to NBFCs will go up. So the NBFC will have to, will not be able to lend at the same rate, and the inclusion is going to get affected.
Yeah,
right?
and the NPA regulation too from RBI.
Okay, and see the other angle to that, if you look at the other part of this regulation, for example, this is not a crib. I think to some extent the regulation is appropriate for some segment, but for example, MSME access to finance, the standard problem that people talk about in literature, pop literature, is that MSMEs don't have access to collateral. So getting a secured loan is an impossibility for majority of them. And in a way, this regulation penalizes unsecured loans.
Yes,
and most MSMEs don't have security to provide unless it is something like stock or whatever. Okay, so that's one good point. I know you would have other points, but Utpal, is there something that you would want to mention?
My biggest crib would be on the whole noise around co-lending, Abhishek. Right from the topmost to, the operating levels, everybody wants to do co-lending. However, you want to do, co-lending in JLG segment, which has really, taken off quite well. I'm yet to see, and of course, the entire fintech revolution, the BNPL revolution was built on the co-lending plus, credit on PPI, license, but apart from these two, I haven't really seen too much, and I've, my shoes have holes in them, doing chakkars. And you see big ads, full page ads, pronouncing co-lending, and when you talk to those banks, they say, acha 10,000 crore se kam, AAA rated, AA rated se kam, this, that, and the other. So, my ask would be to, bridge this gap between talk and action on co-lending.
So you're saying that co-lending is a good way, but can it happen for MSME finance, for example, not just stay restricted to JLG finance, and can younger or lower rated NBFCs participate in the process? Can banks consider them as partners? I think those are, again, two very complicated things. MSME, priority sector, it is kind of half in, half out, that kind of a situation. And yeah, I mean, lower rated NBFCs as a partnership, that's again a big ask. Okay, so two, one, can banks or larger lenders consider younger NBFCs that are innovating MSME lending, can they work with them to do co-lending? That's a good suggestion. Prabhash, anything from your side?
Yeah, we keep talking about, different customer segment, different way of behavior, different way of, repayments and all. But while we, look at the lending to them, we compare them with, all others. For an example, the way corporate are being represented, the same way a small kirana store is being represented. Well, you see some, cash flows, which is coming to the corporate, but that is not there for the kirana stores. So while the NBFCs and all who are working for the MSMEs may tweak their models, may create newer products suiting to the requirement of that particular shop owners or stores, but it is not largely accepted at a larger level or ecosystem level. So can there be a separate section where, you treat MSME lenders, MSME loans as a different one than the, mainstream, comparing them with the mainstream lenders and all?
And this you're saying from the perspective of your access to capital, your
access to capital, even the NPA classifications, all those things. Okay, I mean, this is a completely different segment altogether. You just can't compare them with the corporate loans and all.
Yeah, okay. So one thing that you're saying is that the way you have to evaluate your customer is significantly different from what a large corporate or a reasonably large MSME has to be evaluated with. You will adopt different ways. People need to trust that these are good. I mean, they should test the models, but they should trust that these are better models to do the loans. I think the other regulatory point that you mentioned about is this NPA of 90 days. So NPA for a AA rated borrower is 90 days overdue. NPA for a local kirana store, cycle repair shop is also 90 days, which a lot of people say, and like you're kind of indicating, the smaller folks will have higher chances of facing stress. So NPA 90 days is a little too strenuous. That's what you're
That's
saying.
right. Yep.
Okay. Deepak, what about you?
And then the entire India versus
that I'll crib. So leave that for me. Yeah.
So taking a stab at things last, I think I have the benefit of saying, in addition to all that the others have asked, I think data. I mean, we all, as tech being part of, the fintech, right? I mean, there exists a plethora of data today that we are not really tapping into. I mean, at our end, we are trying to do it, but, because the data exists in silos, I mean, the fact that the borrower has been paying his electricity bill for X number of days, I mean, that itself is a data point. I mean, the mobile number that he's using, tapping into the data of that, what is the kind of usage that he's done, average recharges that he's done, if he's a postpaid mobile bill payer, I mean, has he paid his bill on time? I mean, for example, I can think of commercial vehicle finance. The FASTag data is going to be a gold mine. I mean, if you can get an API which allows you to tap into that, you will pretty much know whether the vehicle's been moving around for the last 30 days or not. I mean, that data exists today because, I mean, the government has laid out these railroads. I mean, the Udyam data. I mean, today we have that ability to, I mean, if we have legislation and the backing behind it, I mean, every state has their own, licenses that they're issuing out. Today, it's difficult for an MSME lender where, you're collecting a lot of documents, and then you're finding ways in which you can authenticate this document. An FSSAI license. I mean, it's a separate licensing body, a pharma license, a shops and establishment license. I mean, a common thread across all of these is just going to be beautiful for, let's say, a lender, because with a single touch, you get access to the entire digital footprint which a small business has created. without him having to, do a lot of it at his end.
Yeah. So break the silos, because there is data. We'll have to find a way to break the silos. Can credit bureaus break the silo?
So since this was a crib question, I'm also going to crib on that, and I'm not going to give an answer. So yes, to a certain extent, yes, but my point was also data, because, the regulator does need to come in and say that, give simple, and it's not a lot of complicated rules and regulations that need to come in, they need to simplify the rules. Let me give an example. For example, the self-help group data. Now we have around 10.2 million self-help group data. However, if you look at the quality of the data, that's not something you could use to either, for scoring or for alternate model build purposes as well. Say there are 10 women in a group, institution A will say 10 and they say 10,000 rupees. Institution B will multiply and say 1 lakh for these 10. Now, so how are credit bureaus supposed to determine, how much has been lent to these, to these women? So simple things like that need clarifications, and this push has to come from the regulator, because every institution, even if they submit data, they have their own way of submitting data. So I think it's a simple facts that need clarification to start with. With that, absolutely yes, credit bureaus could be an enabler.
Okay. So that's interesting. And you're saying that there is a regulatory role to play here to make sure that the way in which the data, I think everybody is interpreting the templates differently and sharing the reports differently. And I think I'll go back to the first point that you made about how do you define NTC. Today, I think the problem is that it depends on the way in which you are looking at the data slice. That whole, if you are in microfinance, you are there, you're not there in retail. If you're in retail, you're not in commercial. That entire flow, customer life cycle has to be mapped. And there has to be a way to do this. Otherwise, lenders will continue to find it difficult to identify, use credit bureau data as a, one solid source of decision-making point. Okay. And I think since Utpal brought it up, I'll anyways, and this affects the NBFCs, it has been affecting us. For example, NBFCs are supposed to be doing the financial inclusion related work. They're supposed to be, making sure all the regulations are aligned with, say, the banks. Over a period of time in the last few years, what has happened is the regulator has been aligning the NBFC regulations almost like the bank regulations. To some extent, that is good. But at the same time, when it comes to more stringent regulations, it seems that the NBFCs are taking on that. So for example, the NBFCs were required to implement Ind AS before the banks. Most of the NBFCs don't have, it has qualified people, but it obviously doesn't have as qualified people and sophisticated systems or the money like typical banks have. So it was, for a lot of us in the NBFC world, trying to do financial inclusion, it took a significant amount of our time to make sure that we understand Ind AS. And I can bet at least, significant number of the CEOs of NBFCs will say that we don't understand 100% of it yet. It seems to be something like a Maya. Now, why burden that crazy thing, or not crazy, I think it is possibly sensible, thing on NBFCs first when they're already under so much kind of a regulatory burden. On that note, I think this is where I would want to end the session. If there are any questions, we can take one or two, or lunch is waiting for all of us. Thank you, everybody. Any questions? No questions. No questions. So lunch is waiting for all of us. Thank you so much.
Thanks a lot to all the panelists, and especially Abhishek for bringing out all those practical aspects of the issues, and also throwing out a lot of food for thought for solutions. Thanks everyone, thanks audience.